can alter the mood in any fashion, or this policy is not for doing that?
No, I think, it's evident that I think, with all the feedback which, the industry participants have been giving to both the government and the RBI, I think, there's a big kind of a possibility that, they want to ensure that, there is some kind of an adjustment which is done to ensure that, the FPI money starts coming back, whether it's in the bonds or in the equities. I think that is something which now even the market and the government and the RBI is very focused on. And I think we should be expecting something on that front.
Okay. Anirudh, the other point seems to be, and something that you were making when we spoke just 3-4 days ago. I'm glad that we're doing that again. But it almost seems that there is a section of the market that is not bothered with the geopolitical stress, with the macro stress that might be, and with the flatlining of the Nifty. A separate bull market is on. In a bunch of names, and portfolios kind of centering around those might actually be doing well. Would that be a reasonable way to think of it?
Absolutely, Neeraj. I would say that, it's always been something like which, I always keep saying that markets like these are something where the real fundamental research, the real equity stock picking, it really makes a difference. And if you look at the broader market, I think there's a lot of action happening beyond the headline index, which I mentioned in your interview the last time. And the good part is this time around, I'm seeing very strong earnings revival across sectors. It's not like, like typically in the past, you would see that, there is one sector, either the IT sector or the banking index, which is doing very well. This time around, if I see there's a lot of earnings pickup, earnings revival, which is happening across industries. And when I say across industries, bulk of them would be in the mid and small cap. And that's the reason if you pick up your charts for the last 6 months to last 1 year, you'll find the mid cap, small cap index has done better than the large cap index, because that is where the earnings are happening.
Anirudh, good morning. Hiral here. My question to you is, taking it forward from what Neeraj is mentioning about the churn that we are seeing as well. A lot of pockets which are seeing that buying interest. Initially, the idea was that probably sectors like defense, auto, in fact, we were having that conversation right now as well. Auto anchors are moving, OEMs are not to that extent. Defense, yes, is seeing buying interest, but where do you buy? Because we just yesterday got a news where we read that there was a record $2 billion drone procurement, I beg your pardon, that is on the cards in the coming years. Now, if you have to look at auto anch and defense, I'm asking you about 3 sectors. Are you positive anywhere where you're buying?
Absolutely, Hiral. All the sectors which you mentioned, they are all my overweight allocations in my portfolio. And just to put it in that same perspective, like you mentioned, defense. See, if I see last 4 or 5 years, whenever we used to talk about defense, the usual names used to be coming up, all the names which are there in the government space, whether it is the shipbuilding companies or you have the HALs, the BLs and the BDLs of the world. This time around, if you see, there's a lot of activity happening in the private defense space. And the announcement which you mentioned about, the drones being, a government order of almost $2 billion of the drones being manufactured and procured. I think, that gives you an indication that government is wanting to deal with the private defense players. And I would say a lot of activity is happening in the private defense companies, both in the listed and unlisted. And we, as a house, we take investments into both listed and unlisted. It's very interesting to find so many excellent defense companies in the private unlisted space, as well as in the listed space. So I would say defense is definitely one area where we are very bullish on. When it comes to auto ancillary, I think, as you mentioned, the difference between auto anchs doing well and auto OEMs not doing great. Even within the auto OEMs, I would say you will find pockets which are doing exceptionally well. Anything which has a large allocation towards EV is doing well. Like, for example, in our portfolio, we have allocations to 2 auto OEMs, which are in the EV space, and they have between them almost 40% market share in the Indian EV, the two-wheeler space. Auto Anch is benefiting from both domestic demand as well as a lot of export opportunity. So I'm quite bullish on all these sectors which you mentioned.
One of the important updates when you talk about defense, I want to ask you is your investment in Sigma Advanced Systems. I did see your fund name appear over there. What is the rationale? Because the stock has already run up, what, more than doubled in the last 6 months. Why at this point in time?
See, we have participated in it earlier also. We had entered into the company much earlier. And also, as you rightly mentioned, the recent rally was too fast to get, any good allocations. The placement which happened, it happened at a good price, at a good discount to whatever is the current market price. And it partly happened because of the pricing mechanism which is there. So it's a good story, again, as I mentioned, in the private defense space. And I think that is where a lot of opportunities are happening. It was a case of a reverse merger which happened to an existing listing company, and the type of order books and the pipeline which the company has over the next 36 to 48 months, it gives you a good kind of the room for growth even from the current levels. Yes, some amount of profit booking might happen in the short run considering the way it has moved up, but we are the long-term investor and we are quite optimistic about the company.
Anirudh, I'm just wondering, you mentioned earlier that you look at listed and unlisted investment opportunities. Which side are you finding more attractive right now?
See, when it comes to valuation, the unlisted space is giving you more comfort, purely because with so much of pessimism in the market, typically what happens is in a market where optimism is high, you will find the ask rate on the valuation front from the unlisted companies very high. In a market where we are today, there's not much money which is chasing the unlisted companies. And that is the reason it is I would say, a time wherein you're getting excellent companies at good valuations. So I'm getting good value in the unlisted space. When it comes to opportunities, I would say even in the type of businesses which are happening in the unlisted space on the defense side is again very, very interesting. And I would say the recent, the Home Ministry announcement which happened that, they want to do, the automated piloting and the securement of the Indo-Bangladesh border, I think that opens up a lot of opportunities for many unlisted companies in the defense space.
Talking about defense space right now, Anirudh, in the listed space, and I asked you that question at 9:28 a.m., 15 minutes after markets have opened, and it actually reflects what you described correctly, pessimism in the markets. Isn't the best time to really create wealth is when everyone around you is pessimistic? And where is that opportunity in your view currently?
Absolutely, Tamanna. I would say that, typically when everything is good, I keep mentioning this example around 18 months back, when I used to meet investors, investors used to give me ideas. And, that is a market which is not meant for us. So now when we meet people, now when we meet investors, definitely, it's evident that it's not so easy to find ideas in the market. And as I said, definitely this is the time any company which you buy at these levels with a view of next 6 to 8 quarters, I think that is where good amount of money can be made. And I have been harping again and again, be in the mid and small caps. And when I say small caps, it's not that you have to get into a small 100 crore, 200 crore company. There are more than 1,400 companies with market cap above 800 to 1,000 crores. So I think there's a big kind of a space there. Be in the small cap, mid cap, where earnings are very strong. And across sectors, I'm seeing that thing happening. So I'm quite bullish on market from these levels.
Thank you so much, Anirudh, for speaking to us today. Great to have you on the show. We have a very special segment coming up, and we're speaking with Black Box. We have, of course, the leadership here in the studios. But before we get to that conversation, Puneet joining in to set up the context. Puneet.
Well, thank you for that. So one of the beneficiaries of what we've seen in the AI plays, and definitely for Black Box, new partnership with Aeonos will, give the further boost to the company. Now, this will be, of course, to scale AI solutions, and it will, free for end-to-end AI infra capabilities of the company. So a little bit more details on what are some of the financial implications of that will be something to watch. FY26, as a whole, revenue grew about 6% at 6,300 odd crores. Margins have been maintained at the 9% range. So, but the company has given a growth map until FY30, where they are expecting revenue to double to almost 12,000 odd crores. So, what will be some of the key strategies? Will it be acquisition-led or new technologies? Will be something to watch from this. Aiming for a 10% EBITDA profile as well, and which is something to watch in terms of how the EBITDA expansion drive goes through. So, these are some of the key highlights to watch out for from this conversation.
Sanjeev Verma, CEO of Black Box, is with us in our studios. Sanjeev, thank you so much for coming in.
Thank you.
You know, a lot of conversation around your company is when someone's talking about investors are looking for AI allied trades in the Indian equity market, in the listed space, and there's very few to pick from. Black Box's name comes up. I'm going to start by asking you to explain where your company is positioned right now in this ever-changing landscape of AI before we take the conversation further.
Okay, so I think from a AI perspective, I think earlier a larger focus was largely on the software side, so, but AI, unfortunately, is not only about software, it is about the AI infrastructure that drives that software. So therefore, a resilient network, a scalable network, a secure network, large-scale data center are important to be able to compute that application and drive it to the end user. It's about experience. And for experience, you don't only require a nice car, you require a good highways, right? So if you have a very nice car and a very poor highway, you'll not get the experience. So similarly, if you look at software to be the car and infrastructure to be the road, a black box is the business of building that infrastructure that provides the experience. So we are at the cusp of the network that provides that experience to experience the AI that you want to experience.
And what has that visibility looked like, say, in the last couple of years?
Dramatically high, right? So I think from adoption to execution is where we are going at this time. Irrespective whether customers are talking about AI, whether they will invest in AI or not, they definitely know that they have to be ready for AI. So a very large part of that, whether building a network or investing in data centers, is getting ready for what's coming ahead. So I think a massive opportunity globally. India, of course, at the cusp of investing very highly. We are very underserved, 1.5 gigawatts. It's a very small investment. So of course, very large investment coming up in this space to drive next generation experiences.
Okay, Sanjeev, my question then to you is, when you're saying we are underserved in terms of Indian markets, how much is Black Box looking at in terms of investments in India, number one? And two, you know, the construction cost, if you have to look at the US versus the India, there is a large differential coming in there. If I'm not mistaken, what, 12 to 15 million dollars per megawatt is what US is commanding. India sitting at what, 50, 60 crores, which turns out
5 to 6.
Yeah, I mean 5 to 7 million, right?
Yeah.
In that kind of a scenario, if you're expanding in the US, in the Indian markets versus US for your data center bit, does that actually have an impact in terms of where margins are concerned? Because the lower per megawatt somewhere will have an impact on business.
A good question. So we have two clear focus markets. Of course, America clearly for Black Box remains a very highly accretive market. It is growing faster, it deploys earlier. But if you look from India perspective, we start late, but we do a lot, right? If you look at telecom, we never had a CDMA. We started with 2G, 3G, and of course 5G. So we started a little later. We are a little late country, but we do it in a robust manner. So I believe India will invest heavily in this space. From a black box standpoint, yes, from a cost of labor is cheaper here. So the overall cost for delivery would be cheaper. People want to do that. But I think we cannot ignore India. Black Box definitely wants to invest highly in India. We put up a center of excellence. We are currently getting ready to partake in India, specifically because many of the global players we serve are India bound at this time. So from a operating procedure perspective, we see a benefit for us. The learning curve would be small. So we are very bullish on India from that perspective.
Okay. And how much are you modeling in terms of margin growth then, if you have to look at 27, 28? Because gradually you will see that grow then.
So overall, I think we've gone public saying we are aspirational to take our business from currently where we are to 2 billion. At that scale, over the next 3-4 years' time, we expect India to be contributing 10% of that. Okay. Right, so it's close to about, say, 2,000 crores from that perspective. Right, and coming back to the margin, I think we have to adjust margin to scale, right? And I think the cost to serve in India will become smaller when the scale becomes bigger. So it will continue to remain margin accretive. So I think we are going about 10-11% operating margin. We should be able to deliver that in India as well.
Okay. Sanjeev, my name is Neeraj, and I was looking at the numbers and the targets that you've given, right? So 12,000 crores is the organic growth by FY30.
Yes.
And aspirational is 2 billion, which means right?
Which will be inorganic
Exactly.
buying out of
I
several
was going to
hundred
ask you that. So you reckon you can get in nearly 8,000 crores or 7,500 crores of additional inorganic revenues in the next 4 years?
Yes.
Okay, how much do you have to spend for something like this? I'm guessing AI assets are not available cheap.
No, so we are into AI infrastructure, and if you look at the history of Black Box, we have been highly accretive acquisitions. Black Box was one of them when we bought out there. So we do not want to overpay. That doesn't mean we want to underpay, right? So I think it's a kind of a mix, and there's no real answer what you would pay. I mean, you would pay what what you believe at the time is the right price, but surely not pay high. We are focused more on our return on capital and return on equity. Both of them not of 30%. It doesn't matter what you pay. What it matters is would it return you 30% to shareholders from a capital and equity standpoint. As long as it does that, it doesn't matter what you pay.
So, therefore, if you manage to do this, and God willing, you hit or maybe exceed your aspirational targets, we pray for
Which we
that.
want to.
Right? We wish you the best for that. But therefore, then you effectively saying that you could actually move from the targeted 17% CAGR growth rate till FY30 to northwards of 22 or 23%.
That's precisely what we want to do. Organically, we should be able to get to 17-20%, and that's what the growth is. Inorganically, if you put that across, we definitely are going. And at this scale of AI adoption, I think that's a fair goal to have. Right? That's a fair goal to have.
Okay.
Is that kitty ready to be deployed as you're having these conversations?
Yeah, so I think...
should I call it a war chest?
No, we actually don't need a war chest as such. I think we're talking about $700-800 million over the next 3 years' time, and it may not be equally in every 3 years' time. We just came out of a smaller acquisition in Brazil of 2S. So with internal accruals, with some debt if required, somehow you pay, I think we are well covered. I don't think we require...
You're dodging that question, which is asking about how much will you need to spend or how much have you set aside?
No, I think we don't...
Will you have to raise any capital for acquisitions?
So we just did a raise of 386 crores.
Okay, so
right? So we do have some smaller chest, if you may, from that perspective.
Kitty,
right?
then we'll call
Kitty
it.
from that perspective, right? And that should allow us to acquire some stuff should we need that. But should we need to be able to require more, apart from what our internal accruals would be from what our profitability is, we can raise equity, we can raise some debt. We would achieve what we need to achieve. The larger focus is would we have the return on capital and equity?
Okay.
And if the answer is yes, we'll find the money.
Okay.
Right?
That's put well. Tell us about this deal with EMIs. What does it mean for you? What does it do for you?
Yeah, it's one, of course, we are infrastructure side, and I think AI-ONUS is largely on the other side of the stack on applications. I believe a combination of these two create what is the total from AI adoption and AI execution standpoint. So it's kind of a symbiotic, synergistic partnership. Quite early on in the partnership period, we are currently focused on defining our go-to-market. So we believe our addressable market, a combination of AI-ONUS and Black Box, will expand addressable market for both our companies, and therefore this partnership.
Okay. What are you looking at in terms of potential revenues or, what do you plan to achieve out of it and the timelines? Because it's still a go-to-market strategy.
Yes. So I think initially, currently we are finalizing or working on a robust, sound go-to-market strategy. From there on, I think customers that we believe are more quicker on AI adoption, largely from workplace and customer experience, be it financial sector. I think over the next 3-4 years' time, the goal aspirationally is to get into triple-digit millions. I cannot put a number at this time, but clearly if you have a partnership and we can't get into a triple-digit over the next 3-4 years' time, that would fall short of expectations. That's what I would say at this time, but I think more to come as we move forward.
Got it. What should investors watch out for? I was tempted to ask you about execution risk, but let's say you have set up this goal. If people want to monitor it, right, about what is it that you do which enables you to reach this, what is that 1 or 2 key metrics that people should keep an eye out for?
Well, of course, backlog and order book. We just reported a very, very strong backlog of order book. We were at 500 million-ish backlog every quarter. That moved to 800 million, so 60% growth on backlog. We expect and we booked about $1 billion of order book in the last fiscal year. We expect that booking this year to grow 50-60%, if not more. So this should track a backlog to order book to projects, because that's, if you don't have a bank in your account, you can't spend money. So if you can't have a backlog, you can't get revenues. So that's one of the key metrics to track for sure.
What is the AI deal pipeline looking like right now?
Very strong. I think.
Sanjeev, you have to leave us with one number.
No, I think
More than
numbers,
adjectives.
No, I just gave you the numbers, right? I think we grew. The numbers are what the numbers are. We just reported. I think most of our conversations now are AI-led in some shape or form, right? Either it is AI adoption or AI readiness. If you look at the data center boom worldwide, it's about AI readiness at this time. They're about spending money. We're not even talking about generating money. Because if you can't put those infrastructures, you can't generate. So we are focused on supporting the build out of that infrastructure.
Sure.
So from a deal pipeline perspective, I think if we are planning to close 50-60% more of booking than previous year, which lands about $1.5 billion or more, clearly the deal pipeline is about 2-3 times than that. So the math is simple, right? I mean, in our business, you should at least cover 2-3 times of what you expected bookings are. So several billion would be the question, would be the answer, sorry.
Okay. Sanjeev, great having you here.
Thank you.
Thank you for coming in and talking to us about Black Box and what the company does. It's in a very exciting space, and we're keen to watch this journey.
Thank you so much.
Pleasure, sir.
Thank you.
Thank you. All right. Focus now on gold. And you just saw the visuals, in case you missed it, the live visuals of RBI Governor walking in. That address starts in about 15 minutes odd. But this quick conversation we want to get in. HDFC Mutual Fund has announced a temporary restriction in lump sum subscriptions in its gold ETF and fund on fund, citing prevailing economic and market conditions. Ridhima joining in for more details.
So HDFC Mutual Fund has restricted bulk investments in gold ETFs and gold ETF fund of funds, and the restrictions on gold ETFs will begin from June 8, after which rupees 25 crore and above investments will not be permitted. This is as per the addendum from HDFC Mutual Fund. And similarly, the restrictions on gold ETF fund of funds will start on the lump sum investments, and the cap has been made of monthly investments of up to rupees 10 lakh, and this will be applicable from June 5th after 3 p.m. Other AMCs are also considering it as per our sources, and key AMCs with highest gold ETF AUM include Nippon Mutual Fund, ICICI Mutual Fund, after which SBI Mutual Fund and HDFC. Together they manage 1.3 lakh crore of investments. And HDFC cited market and economic conditions, and in the response to NDTV Profit, they also told us that precious metal pressure has led to this move and is pressure on the external accounts, and they advise investors to go for equity and debt mutual funds at this point of time. Now, the Indian government has this move, by the way, comes after they had already taken back their passive gold silver fund of fund in May after PM Modi's urge, and the government has been struggling with high gold imports. They've already increased the custom duties from 6 to 15%, and now let's see when the other AMCs also take the similar steps, and this is something we need to wait and watch.
Some have already taken those steps. Feroz Aziz, Joint CEO, Anand Rathi Wealth, joining in to talk more about it. Feroz, very good morning. Great to have you on the show. Tamanna here. Do you think more of this kind of action will follow? And what does this mean for investors who are finding, frankly, gold now more attractive than what's happening in equity?
Good morning, Tamanna. I think other AMCs will follow. I think HDFC will also amend a little, ideally should. 25 crore limit is just a message, not a limit, largely. Of course, a 10 lakh limit on the fund of fund, that's the gold ETF fund of fund, is a reasonable limit, one. I think as an industry, we have to guide an Indian population in the right direction. Already 28% of Indian household savings is in gold, 28%. In the latest number is 1,635 lakh crores is the total household savings, in which 28% is in gold, 1.8% is in equity mutual funds. Thereabout same amount is owned by individuals in listed equity. So 3.5% in equity put together, direct and equity mutual funds, and 28% in gold, especially because of the mark to market. We have 4 crore crores of gold, adding another 1.5 lakh crores, which is about 0.3% of the already stuffed gold in is to my mind not logical, especially if I give you some data. I was just trying to see the kind of recency bias. Total net flow from March 24 to Feb 26 in ETFs has been 81,828 crores when the gold price was 68,000. In April 2024, there was a 400 crore outflow. In Jan 2026, when gold was at 1,66,300 average, we had 24,000 crores coming in. If the 81,000 crores was staggered in 24 different installments, people would have made 33,800 crores more. Actual mark-to-market computed on the gold inflows for the last 24 months, which we do as an average Indian investor inflow, is close to about 23% only when gold has risen 117%. If they would have staggered and done an SIP, the Indian investors would have made 52,000 crores as against 19,132 crores. That's from March 24 to Feb 24. This is called recency bias, and removing that bias, I think, is an industry responsibility, and HDFC has taken first step.
Okay, so Feroz, okay, let's understand this. Good morning, Hiralia. What would this actually then mean for an investor in terms of the action that they have to do? Because in one way, we're talking about not really buying physical gold. We are talking about, in fact, you've come out and said that you should be selling some portion of your gold, I think, what, 10 grams? We spoke about it earlier, and now you have ETFs also which are freezing. Where do investors go then?
Thank you for the last time, because you access and try to amplify the I sold my gold campaign. If you look at any kind of mathematics, right? If tomorrow Nifty became 72,000 from 23,000, would I do some rebalancing between equity, debt, and gold? The answer is yes. Any amount of rebalancing is nothing but a synonym for profit booking. If my 2 crore gold in a year and a half has become 4 crore as a country, and if I was the owner of this money, I would say, yeah, I will rebalance it towards equity, especially when equity for the last 25 years of this century from FY2 has given negative returns for 5 years, which is FY2, FY9, FY12, FY16, FY24, and FY26. If there has been no consecutive Nifty negative return any financial year in this century. So if that math has to be believed, the Nifty closing of 22,313 on March 30th, which was the last working day for the last financial year, we're already up with all the pessimism. It is unlikely that we will not have median plus returns in this financial year. If one of my assets has tripled in the last 1 year, would I sell a small portion of 3, 4, 5% of profit? Not even if it is doubled. I'm not asking you to eliminate all the profit. So that's what I've been doing in Abhiyan. Now, some people have supported, and media houses like yourselves have supported. For our clients, we've been saying 100 grams because HNIs have averaged a lot more. One of my clients sold a delivery which he was supposed to get from MCX of 57 kgs, 88 crores. He unwound it, saying that, yes, makes logical and patriotic sense.
Right. So I think that rejig, that rebalancing is the key right now. But thank you, Feroz, so much for joining in. Always a pleasure to speak to you as well. But we'll quickly slip into a short break. On the other side, we start our special RBI coverage. Don't go anywhere. We'll be right here.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets.
Welcome back to India Market Open on NDTV Profit with the full RBI monetary policy coverage. You know, to start off with, first up, I just want to pull up some interesting trends that we've picked up from Google. Now, since the war jitters, that has actually turned your RBI MPC into the key search buzz. If you see the kind of trends from May to now, in the last couple of weeks, the search engines have actually fired with RBI monetary policy as the key search word, with 100% coming in there. And that's what this chart is showing you in terms of the RBI MPC. But let's understand, is it inflation or is it going to be the rate cut, which is the key one? If you start off with from May onwards as well, initially everyone had concerns with regards to inflation. So at that point in time, that's where the surge was. You had major surges coming in terms of inflation, where it was very benign in terms of what the RBI would do. However, the surges with regards to where the inflation goes, that has tapered off from 100 to almost 42, whereas a slight surge coming in terms of the RBI monetary policy action. So that's what Google Trends are indicating so far. But as we all know, we're all talking about the expectation, which is somewhere more on the status quo side. Expectation is that probably there could be an additional 2 rate cuts in the current financial year. And the commentary, which is right now neutral, what happens in terms of the stance, whether the governor turns hawkish or not, is the key question. In fact, let's get across to our guest. Gaura Singh Gupta joins in as well. Gaura, good morning and welcome to the show. Always a pleasure to speak to you. I mean, we've been talking about overall expectations of what the street is looking at. But at this point in time, with what's transpired so far, what is the key aspect that you will watch out for from the governor's speech?
So our expectation is for a pause. I think the key metric to look at will be the tone of the policy, and we do feel that the communication will be more cautious, with the RBI restating that the flexible inflation targeting framework provides them the monetary policy space to look through the first round impact of the surge in fuel cost on inflation, but they remain ready to act if there is some generalization of price pressures. So if there's any potential spread of inflation pressures from fuel to non-fuel items, RBI is ready to act. So the communication would be more cautious to a little bit hawkish. We do expect that they'll remain on pause, that they'll keep the stance unchanged as neutral, because neutral helps them to deal with both the upside risk to inflation as well as the downside risk to growth. I think commentary on growth is going to be positive because high frequency indicators for now have held up. But yes, the outlook to growth is also very challenging. It's not just inflation. And we do expect some measures to get capital inflows. That's something the market will be very closely watching for.
Yeah, please go ahead.
No, I was asking Gaura, sorry, you didn't mean that you expect this at the RBI level, did you?
The capital inflow measures?
Yeah.
Some announcement either today or in next few days.
From the Reserve Bank.
It'll be a joint announcement. So it'll require the government of India also,
exactly,
as well as, let's say, the RBI. Both are required because RBI will have to give, if whatever measure they come up with, whether it is an FCNRB or a dollar bond issuance, the RBI will have to provide a discount on the swap window. So both are required. You require a coordination between the government of India as well as the RBI. Market expectation is that you may get some announcement either today or over the next couple of days. But that is something everybody is watching out for, because the issue for India is that on the capital account, we are not attracting capital inflows. It's not a current account issue. So interest rate should not be used as a defense for the exchange rate. Interest rate should only be used whenever there is visibility that there are generalized price pressures, which is not the case at this point of time. But we need to do something.
I actually want to stress. No, you're absolutely right, and it's bang on, because that's the large expectation, right? From the last 2 days, the buzz is, when is that is it going to come in the shape or form of an ordinance? Is there going to be an announcement? Which department does it? All of that is going on. Then this is yet another window to hear from policymakers on how they intend to make India as a destination more attractive to foreign flows in whichever shape or form. What is available in the RBI's toolkit to do this, apart from helping out implement a measure that, say, North Block decides? So apart from, lowering those rates, etc., and tinkering, what else can the RBI say or do today? What should we look out for?
I think given the fact that the interest rate differentials between India and the US are so narrow, and they're going to remain narrow, this particular West Asia crisis, globally, you will see the upward pressure on yields. That is not going to go. This crisis comes at a time when global central banks don't have space to ease. So upward pressure on global yields will stay. So in this sort of environment, getting capital inflows into an emerging market is always challenging. So for that, you will need to, basically from the RBI perspective, if you consider issuance of dollar bonds by PSUs, the RBI will have to offer a swap window to reduce the hedge cost. If there is FCNRB, then again, a similar reduction of hedge costs will be required to make it viable both for the investor as well as the borrower to use this instrument, because the interest rate differentials are extremely narrow. So that is the main requirement. Right now, in the near term, we need to get debt capital inflows. There are speculations that there could be some tax changes also. That will be a Government of India move, possibility on bonds. Again, that's a Government of India move, but how we will need to see measures that are spread across instruments, not just limited to one instrument, because this is not 2013. There is a lot of difference between 2013 and now. 2013, India was in a much weaker position. It had lower FX cover. Currently, India is in a much better position. We have better forex exchange rates, exchange reserves buffer. Our current account deficit has been less than 1% for the last 3 years. That was not the case in 2013. So this is not 2013, but one key difference is that the interest rate differentials were much higher back then. Than they are now.
So it's narrow. It's narrow right now. We just have a minute and a half left to go, or 2 minutes left to go before the governor comes on, and we've got Jayesh Mehta on his way and joining in to give us his view. Jayesh, what are you hoping to see? There's so much for the governor to cover. The rupee, foreign investments becoming more attractive to India, inflation, economy. When are we going to see a price hike? What are you looking out for?
I think from the policy perspective, we should expect only, no cut today, and maybe some commentary on, we'll be watchful, we'll be looking at it more closely. Beyond that, I don't really see, right? I think all this noise about raising money, taxation and all that should be actually coming from the central government and not Reserve Bank of India. So the tax part is that side of it. From a policy perspective, I think Governor RBI, when his speech or maybe whenever the interview is, maybe he will talk about, like, we don't have to be so panicked right now at this moment, which is the way I think I would say the market is more panicked than market reporter, economists are more panicked than the RBI themselves. And if you look at it 15 days back, like everybody was talking about, you should raise 100 basis points, 50 basis points and stuff like that, and the interest rate differential. I don't think that all matters. We need to really look at it on a macro basis. How do we, plug the FPI outflow, daily outflow, which is happening on the equity side? How do we plug that? If we are able to sort of plug that, I think the rest is all manageable.
Okay, just about 3 seconds to go. We're waiting for the governor to come on and speak. But very quickly, Jayesh, what would be the one positive surprise you would hope for from the policy? And would it be concerning the rupee?
So I think change of stance should not be there. It should be still continuing with the same stance. And nothing specifically on rupee. Of course, on his commentary, it might show some strength. And we have enough reserves to manage it. Yes, there is a concern, which is the FPI equity outflow. that concern, how it is addressed, that only maybe central government can address that. But I don't think RBI has some remedy. They need to watch on that. Beyond that, I think something on the LCR, if something comes on.
Over the past few months, the global economy has been shaped by heightened uncertainty, disruptions to key trade routes and supply chains, increased market volatility, and cautious business sentiment. Let me at the very outset emphasize that the Indian economy entered this episode of global turbulence with much better fundamentals than in previous similar episodes. We remain confident to withstand these shocks with minimum pain. Nevertheless, it is important to not only confront and address these challenges, but also at the same time take this as an opportunity to further enhance our resilience. Global economic outlook remains clouded by the continuing geopolitical impasse in West Asia, as sharply escalating energy prices and global supply chain disruptions continue to hinder economic activity. Faced with difficult trade-offs, monetary policy has turned more cautious. Major advanced economy central banks are likely to pivot towards monetary policy tightening. While equity markets remain buoyant, driven by AI-fueled optimism, global bond markets remain bearish amidst renewed inflation fears and continuing debt sustainability concerns. Risk-off sentiments and safe haven demand are imparting volatility to forex markets, with a depreciating trend in many EMI currencies. In this backdrop, the Monetary Policy Committee met on the 3rd, 4th, and 5th of this month to deliberate and decide on the policy repo rate. After a detailed assessment of the evolving macroeconomic and financial developments and the outlook, the MPC voted unanimously to keep the policy repo rate under the LAF unchanged at 5.25%. Consequently, the STF rate remains at 5% and the MSF rate and the bank rate at 5.5%. The MPC also decided to continue with the neutral stance. I shall now briefly set out the rationale for the decisions of the MPC. The committee noted that the global environment has deteriorated since the last policy meeting in April, with the conflict lingering amidst a fragile truce. The adverse implications of the extended disruption in supply chains and elevated energy prices are reflected in the moderation of growth and increase in inflation projections from the April policy, and I'll come to these a little later. CPI inflation remains below the target despite global shock, as the pass-through to domestic prices has been limited, while the baseline projections point towards headline inflation firming up towards the upper tolerance level in Q3 this year. The impact of the supply shock is expected to wane Q4 onwards. The underlying inflation pressures continue to remain benign at this juncture. However, generalization of inflation through second round effects on expectations and wages is a distinct possibility warranting a close vigil. The outlook also remains clouded due to the subnormal southwest monsoon forecast and El Nino risks. As for growth, the MPC noted that elevated energy prices coupled with global supply constraints are having adverse spillovers on economic activity.
while domestic demand remains resilient and manufacturing and services sectors activity continue to expand, there are incipient signs of moderation in some sectors as suggested by high-frequency indicators. The MPC was of the opinion that there are considerable risks to the baseline assessment of inflation and growth, which I am going to present shortly, due to the uncertainty about the duration and intensity of the conflict, magnitude of its spillover effects, and the pace of restoration of supply chains. Additionally, the food outlook too remains uncertain on account of subnormal southwest monsoon forecast and El Nino. Although risks of higher inflation have amplified, the MPC felt it would be prudent to wait for greater clarity to emerge. Accordingly, the MPC voted to keep the policy repo rate unchanged. At the same time, the MPC will continue to remain data dependent and closely monitor the developments, including supply side pressures getting embedded in the general price level and inflation expectations. As mentioned, the MPC also decided to retain the neutral stance. I now come to the assessment of growth and inflation. First of all, growth. The second advanced estimates released by NSO placed India's GDP growth for last year at 7.6%. This is owing to strong expansion in private consumption as well as fixed investment. Robust performance of manufacturing and services sectors were the growth drivers from the supply side. As per several high-frequency indicators, domestic economic activity remained largely steady even since the outbreak of the conflict. India's manufacturing and services PMI further suggests that both sectors continue to be resilient and business expectations are still positive. On the demand side, private consumption aided by discretionary spending has remained resilient so far. Fixed investment has also maintained its momentum despite cost pressures. Merchandise exports recorded strong growth in April this year. This is notwithstanding elevated freight and insurance costs. Services exports are also holding up well, reflecting sustained demand despite concerns about AI. Overall, the economic situation has broadly exhibited resilience and withstood the conflict spillovers, although the impact of cost pressures is becoming visible. Going ahead, the rise in prices of energy and other inputs, coupled with supply disruptions, is likely to weigh on economic activity. While import diversification in affected commodities is likely to improve supply, it would still come at a higher cost. The full impact, however, will depend on the duration of the conflict, the time taken for normalization of supply chains, and the burden-sharing approach among the various stakeholders. The pass-through of higher energy prices to retail products is also becoming evident. Additionally, the projected deficiency in the southwest monsoon will have implications for agriculture production and rural demand. However, the programs and initiatives for crop diversification, water harvesting and conservation, climate-resilient practices and short-duration crops, among others, are expected to mitigate the impact. Sustained momentum in services, continuing impact of GST rationalization, and broadly stable employment conditions should continue to support urban consumption, even though rising inflation could be a drag on the purchasing power of households. Government capex is expected to remain robust, while the elevated capacity utilization and sustained credit flows from bank as well as non-bank sources are supportive of corporate investment. Cost escalation and heightened uncertainty could, however, dampen investor sentiment. Weak global demand and high logistic costs are also headwinds for merchandise exports. Services exports, on the other hand, are expected to sustain their momentum as demand for Indian services remain healthy. Several measures undertaken by the government, including support to MSME and export sectors, efforts to ramp up domestic gas and crude production, encouraging use of domestically produced alternatives to imported inputs, and diversification of critical imports should help cope up with the external shock. Taking all these factors into consideration, real GDP growth for this year is now projected at 6.6%. We had earlier projected 6.9%, of course, with huge uncertainty and downside risks. With Q1 now projected at 6.6%, Q2 at 6.3%, Q3 at 6.5%, and Q4 at 6.8%. Prolonged global supply chain disruptions, volatility in global financial markets, and weather-related shocks continue to pose downside risks to the domestic growth outlook. I will now talk about our inflation assessment and outlook. Although firming up marginally from 3.2% in February, headline CPI inflation was below the target during both March and April this year. In fact, 3.4% and 3.5% respectively. While food inflation edged up, fuel inflation remained muted as retail prices of petrol and diesel were unchanged in March and April. Core inflation remained stable at 3.7% during March and April. Excluding precious metals, core inflation was much lower at about 2.1 to 2.2% during this same period. International crude oil prices, the Indian basket, have averaged around $110 per barrel during the last 2 months. And indications are that the average oil prices for this year would be substantially higher than what were assumed during the last policy. You may recall that in the last policy, we had assumed crude oil prices to average for this year at $85 per barrel. Higher energy prices and an increase in several input prices also led to a sharp spike in WPI inflation in April. It was more than 8%. Turning to the inflation outlook, the partial pass-through of high global crude oil prices to domestic pump prices of petrol and diesel started in May. Prices of several inputs such as commercial LPG, industrial raw materials, chemicals, base metals, rubber, and plastic products, among others, have increased. These could exert upward pressure on CPI inflation in the coming months as firms pass on these higher input costs. Considering all these factors, CPI inflation for this year now is projected to be at 5.1%, about 50 basis points more than earlier projected, with Q1 at 4.2%, Q2 at 5.1%, Q3 at 5.9%, and Q4 at 5.4%. Core inflation is projected at 4.7% for this year. These forecasts, I may mention, are subject to upside risks due to heightened uncertainty because of a variety of reasons, global supply chain disruptions, global commodity price shocks, uncertainty about the spatial and temporal distribution of the southwest monsoon, and risks from El Nino conditions getting developed. However, I may mention that adequate stock of food grains and satisfactory reservoir levels provide a lot of comfort to us. I now move to liquidity and the financial market conditions. System liquidity, as measured by the net position under the LAF, stood at an average daily surplus of 2.63 lakh crore rupees since the last MPC meeting in April. The Reserve Bank proactively undertook durable as well as transient liquidity measures to ensure that there is appropriate liquidity in the banking system. Going ahead, we expect that the usual drawdown of government cash balances after the transfer of RBI surplus and the return of currency during the monsoon season will aid banking system liquidity in the near term. Since the April meeting, the weighted average call rate traded within the policy corridor, while short-term money market rates, especially rates of CPs and CDs, commercial papers and certificates of deposits, moderated before coming under pressure again in May. GSEC yields eased in April following the ceasefire announced in West Asia, but firmed up in May. Transmission in the credit market has moderated during March-April with some hardening in deposit and lending rates. However, it is still quite robust. The Reserve Bank going forward would continue to ensure appropriate liquidity in the banking system to meet the productive requirements of the economy and facilitate further monetary policy transmission. As per the latest available data, credit from all sources last year YOY grew by 15.4%. This is in comparison to 12.1% recorded the year before last. Bank credit, in fact, has been even more robust at 16+%, and it is broad-based as market-based funding became costlier. Coming to financial stability, the system-level financial parameters, as I mentioned in my last April statement, relating to capital adequacy, liquidity, asset quality, profitability of scheduled commercial banks, these continue to remain healthy as earlier, although there is some moderation in profitability as compared to the last year. Similarly, the system-level parameters for NBFCs too are very sound, with adequate capital and improved GNPA ratios. I will now speak about the external sector. It successfully navigated the challenges of elevated tariff and trade-related uncertainties last year amidst a turbulent global economic environment. The surge in energy prices and persistent trade policy uncertainties continue to pose upside risks to India's current account deficit this year. Services trade surplus and inward remittances, however, are expected to provide some comfort. On the external financing front, buoyant gross FDI and higher net FDI last year, we had record gross FDI of more than $94 billion and a net FDI of about $7 billion. These underscore the continued interest of global investors in India. FDI flows have been rather encouraging even in April. This year, in 26-27 till 2nd June, net FPI to India, however, witnessed outflows of almost $14 billion, primarily in the equity segment. Nevertheless, as per the latest available data that we have with us on May 29-26, India's forex reserves stood at a very healthy $682.3 billion US dollars. These are adequate in terms of the standard metrics of reserve adequacy, with an import cover of about 11 months and external debt cover of 89+%. Various policy initiatives over the recent months are expected to further strengthen and support our balance of payments. These include the recent agreements with major trading partners, some of which have now come into effect, opening of the insurance sector to 100% FDI, ethanol blending program, which has been a great success, push for energy transition, which is gaining momentum, easing of FDI restrictions for land bordering countries, liberalization of the ECB framework, which was announced some time ago, and several others. To attract foreign capital, I also have a few measures to announce today. First, for government securities under FAR, which is the fully accessible route, we are expanding the universe of specified securities by including all new issuances of 15, 30, and 40-year tenor G-Secs. Till now, only securities, government securities up to 10-year tenor were included. In addition, limits pertaining to short-term investment, concentration, and individual securities on FPI investment under the general route are being removed. The government recently, this morning, has provided tax benefits to government securities. All these measures together should help attract foreign capital for government borrowing. Second, the limits for investment by NRIs and OCIs in equity instruments traded on the stock market without SEBI registration are being increased. Further, the same facility is being extended to all individual persons resident outside India at par with that available to NRIs and OCIs. Third, a facility of concessional forex swap will be provided for about 4 months till 30th September 2026 to incentivize ECB's external commercial borrowings by public sector undertakings. Fourth, a similar facility for bearing the full hedging cost shall be provided again till 30th September to the authorized dealer banks for raising 3 to 5 year FCNRB deposits. Fifth, it is proposed to restore the time for realization of export proceeds to 9 months. This was earlier increased to 15 months. I may mention that while these measures are expected to strengthen our balance of payments, we will continue to make the right policy adjustments as may be required to further promote exports and attract and incentivize capital inflows. As I have often reiterated, a word on our exchange rate policy. It continues to remain unchanged. We do not target any specific level or band. Instead, we allow the exchange rate to be determined by market forces. Our experience, however, suggests that it may sometimes witness movements, often caused by speculative pressures, especially in the wake of heightened uncertainty, some of which we witnessed recently, which are not in sync with the fundamentals and are disruptive of economic activity. While our objective is not to resist market-driven adjustments, we shall curb excessive volatility and prevent disorderly market movements. While our foreign exchange reserves provide us with sufficient buffer against external shocks. We have a very broad range of regulatory and market-based instruments to respond effectively as may be required. In this regard, we shall remain vigilant, and we are fully prepared, as I mentioned earlier, to do whatever it takes to preserve an orderly market conditions. To conclude, global economic conditions and sentiments continue to be frayed without any meaningful resolution of the West Asia conflict. While these have adversely impacted the domestic growth inflation outlook, the economy at this point is relatively strong. We shall put in place policies to meet the challenges while taking measures to further strengthen the macroeconomic fundamentals of the country. Thank you, Namaskar, and Jai Hind.
Okay, we came to hear the policy and we got that and much, much more. It's like a whole bonus segment of your favorite episode, because here's what's happened. That long-awaited ordinance which attracts back foreign investors has been announced. Tax burden has been eased for foreign investors. The important thing, it's effectively made returns from Indian government bonds tax-free for foreign investors. What is the aim? To boost attractiveness of Indian sovereign debt for global investors. LTCG on G-Sex is cut from 12.5% to zero. Withholding tax on interest income from government bonds has been cut from 20% to zero. We had said this would happen. I think it's very interesting that they have chosen to put this out there through the Reserve Bank of India policy announcement.
Yeah, and something that Gaura mentioned, that you will probably see a series of small measures which the government and the RBI will have to collectively do in order for this to happen, and this is what has happened. Very good move, in line with what needed to be done. Can more be expected? I would suspect yes.
And the other question is, will this help you actually arrest the rupee depreciation and counter the sell-off in equities, is what we have to see now?
Well, hopefully inflows in the bond markets comes
Correct.
in, and because that will be the big thing, right? And I think I'm told Shrimi is with us, and Shrimi was the one who broke this story first on Indian business news platforms yesterday at 9:15 a.m. or 9:20 a.m. Shrimi, great news break. I think Tamanna just enumerated everything that has happened. Add to that, what has happened?
Just to reiterate, Neeraj, and we've been on this news, top of this news, that now it's taken the shape of ordinance, and government has moved the ordinance and granted a full tax exemption on interest income and capital gains earned by foreign investors from investment in G-Sex. And this relief, and this is very important to highlight, this relief comes through ordinance and being effective from April 1st, 2026. So that's very, very important. It's not like effective immediately. So they will have full tax relief from April 1st from this financial year itself. And of course, 12.5% is going to be nil. Your 20% withholding tax is going to be nil. So there is no tax at all. It's tax-free for foreign investors on all the instruments related to GSEC. And as a result, you will see that even the ordinance extends similar tax treatment to banks for international settlement as well. That's also very important to highlight here, because that government saying that exemption will be subject to a first prescribed information reporting requirement. But this is also very, very important, and of course it's expected.
Simi, I'm going to come back to you. Everything in terms of information is on your screen. Apart from the ordinance which has been released today, and that gazetted document has been released, there is also a lot of measures that the governor has talked about. That is also all on your screen. But I'm going to get a quick view from Rajesh Gandhi, Partner Direct Tax and Regulatory at Deloitte India. Mr. Gandhi, thank you so much for speaking with us. Is this the balm that was required for FPIs? What does it effectively mean in terms of returns that some of these investors and this cohort of investors can see from government bonds?
Yeah, I think so. I think this is an extremely important and very encouraging news as far as in foreign inflows is concerned in India, because as we know, investment in government bonds and GSECs forms a significant portion of the total FPI or FI investments into India. A complete tax exemption is probably what was not expected. We were thinking about tax exemption on capital gains, but may not be on interest, maybe a little lower rate, just like the 5% which we used to see 4 years back. So a complete exemption both on interest and capital gains, I think is extremely welcome and should help to boost, getting money into India. May not be in the immediate short term, but I think, certainly it will have a very positive effect.
What's the immediacy? I mean, this is aimed at getting in that 25 odd billion dollars of inflows which was missing in the Indian bond markets. You reckon since this is retrospective, we start seeing some bits of that, or more needs to be done?
No, I think from a GSEC or bond perspective, this is what the government could have done at best on tax. Though, yes, I must add that there is a demand also to try and reduce capital gains tax on equity, both long-term and short-term. But I think that is a more strategic decision which the government will have to take, because it has repercussions for different kinds of investors, right? So in the immediate step, I think what they would have done, they have done. And as I said, it should be seen quite favorably.
Okay. Ashima Goel with us, former member of the MPC of the Reserve Bank of India, Radhika Rao, senior economist and executive director at DBS Bank, with us as well. Welcome to both of you, and thank you so much for speaking with us today. Ms. Rao, I'm going to start with your quick take. I can see Ms. Goel there as well. But if I can just get a quick word from Radhika Rao on what we have seen. I'm told that line has been lost. Ms. Ashima Goel, there is what the government has announced, and then there's a series of measures that the governor also put through to encourage foreign investors to come back. And we'll come to what the governor said on domestic economy, etc. But why has this part been so crucial in the current context of foreign outflows and maintaining balance of payments?
I think the markets were nervous. That is why they needed something. And this gives them that something. Because although our foreign exchange reserves remain very large, but for the last 2 years, we've been seeing that there's an overall balance of payment deficit. So the fear was that there are not enough and large equity outflows. Now, this has normally happened in the past whenever we've had global risk aversion. And unfortunately, this has been a bit prolonged because starting with the tariff episodes, then the oil shocks to which India is vulnerable. So therefore, some measure that reassures markets that this balance of payment deficit is likely to be to disappear now with these carrots given that will improve inflows into India. And the interesting thing is that since the rupee is highly depreciated in real terms, and in all past episodes, we have seen when it reaches such levels, it reverses. Now, if these inflows come in and the rupee reverses, that will give them double returns, because not only will they gain from tax exemptions, but coming in at a lower rupee and gaining from a higher rupee will give them major returns. So it's a double benefit for them.
Yeah, well, and that's an important point that Ms. Goel makes. Let's get in Devang Shah, Head of Fixed Income at Axis Mutual Fund, on the show as well. And keep an eye out for what's happening to the rupee, to the bond yields, to the equity markets as well, I dare say. Devang, thanks so much for joining in. Was this something that, we of course spoke about this. We broke this story yesterday on NDTV Profit. But what has come in is a tad bit sweeter than what people were anticipating. Is this the best that could have been done? What's the impact of this move? I'm not talking about the Reserve Bank of India rate holding, but the taxation going away.
Yeah, so thanks first of all for having us. As you rightly highlighted, I think this is more than what market was expecting. Market was expecting a lot of chatter about some kind of relief on taxation, but I think RBI has announced everything along with the government, whereby they have actually cut across the withholding tax. They actually looked across at a significant reduction in the LTCG. They're giving away the LTCG on the bonds sale. as government bond sale, as well as an FCNR facility, and they're talking about a concessional ECB facility. So if you'll ask me, it's an all-round positive steps to take care of the or to stem the depreciation of the currency. Our perspective is that if you look across at the growth inflation dynamics, they have weakened the growth and increased the inflation to 5.1 from 4.6. Which as per me is a precursor that RBI is preparing markets somewhere down the line by giving forward guidance that yes, if the oil situation doesn't contain, then probably from August policy, there is a possibility of rate hike. But for today, I think all the measures rightly taken across for stemming the currency and somewhere down the line getting the flows, which was the issue, because the problem was current account deficit and BOP deficit, which they have tried to bridge by taking all these steps.
Okay, so Devang, thank you for that. In fact, a quick question with Radhika before we go to Manish Santalia as well. Radhika, everything is more important right now in terms of the taxation part of it versus the stance et al. How are you seeing that actually come and impact, I mean, the impact when it comes to arresting the depreciation in terms of the rupee and the kind of FPI flows that could be coming in now?
No, certainly, I think the measures that were announced was the tail end of the policy conference is kind of overwhelmed. I think what happened on the benchmark rates. I think the interesting bit is that in parts we were hearing a lot of market chatter on the, the kind of the toolkit that could be used. But the central bank and the government have rightly used everything that was announced, essentially, I think showing, that all efforts, all hands are on deck in terms of wanting to attract inflows. I think we've seen concessional swaps arrangements for the ECBs as well as for the FCNRB. And we know from 2013 that the FCNRB window usually successfully draws in. Of course, it's a lot more expensive now than it was back in 2013 because the US rates have generally edged higher. But nonetheless, I think the central bank does see reason to attract flows to kind of better balance the current account and the capital account flows at this point. So I think they've got the pulse of the problem and they've acted prudently and fast. I think that really will put onshore market, especially the rupee, in a stronger position. We've already seen that in a knee-jerk gains in the currency. And I think as the details are, come about, I do think that the take-up will be a lot more positive.
Okay.
And rate
Okay.
hikes, just to last point, rate hikes in general have not had a very great impact on the currency in the past as well.
Okay, so you kind of ruling the impact of that out. Fair call. We've got a battery of guests. Make this a bit of a rapid fire. Manish Santalia with us. Manish, equity markets just cooling off a little bit, but frankly, from 0.2-0.3%, it doesn't matter. What do you make of the impact of this debt taxation move on flows on the currency, and if at all, a collateral impact on the equity markets?
Yeah, so I think the direct impact would be broadly on the rupee. I mean, rupee has been undervalued for quite some time. Even in the backdrop of the Middle Eastern crisis, fair value should be around 90 to 92. So I think this comes in as a helping hand towards the strengthening of the rupee. And in that backdrop, if the rupee strengthens, one of the reasons for underperformance of Indian stock markets was primarily that rupee was depreciating very, very massively. I think this comes in handy. And, because of the currency depreciation, whatever was getting sold, I mean, at least that would get abated at this given point in time. And there are numbers to support, the earnings support has been there. So all in all, positive, a rub of positive even for the equity markets, and definitely a positive for the rupee.
Sharp fall though, Manish, at this point. Do you think that there is a bit of, I would say maybe this was priced in, but not really, because you didn't see this big boom in markets on one hand, and there's a bit of disappointment that nothing is done to attract investment in equities. This is very, very debt focused.
Maybe it is, now the prerogative of the capital gains exemption in equities would likely come in the next budget. So in that backdrop, if the markets are disappointed, it could be that way. But I think it's not a major fall that you're seeing. This will get digested, and my sense is long-term repercussions, medium-term repercussions are going to be positive for Indian equities as well.
No,
from a foreign FII outflows perspective, this would definitely help.
Okay. Manish, from a FII perspective, the outflow perspective, this will help. Stay with us. Rajendra Kumar Sabu, Executive Director at UCO Bank, joins us as well. Mr. Sabu, good morning. The announcements that have come in from the RBI, a whole host of measures you're talking about on the FI side. tax relief on the GSEC front. You're talking about the incentives that even NRIs get. What do you make of this entire measure?
Yeah, good morning. So we have seen various measures announced by Honorable Governor today in MPC conclusion meeting. So we see that the focus of all the measures are mainly on increasing the inflows of foreign currency into India, because we have seen the pressure on our USD rates, rupee USD rates in the last 2 months due to this developing geopolitical issues. So announcing these long-term securities under FAR route for FIIs, like they have announced for 15-year, 20-year, 30-year securities also. That will be very, very helpful in bringing the means inflow into India. And then they have also announced certain means up to September window for concessional swap rates. Because we have seen the heightened means our forward premium in last 2-3 months, the premium rates have been very high, and that has increased the hedging cost of ECB also, as well as other investors also. So announcing these concessional window, and particularly for CNRB deposits also for the banks, that these points are very, very positive for the means banks in particular and economy in general. It will increase the inflow, as already said by other speakers also, and we will see positive impact not only on the forex rates but also on the GSEC rates and further investments into the country.
Okay, I'm going to come back to you, Mr. Sabu, with a bit of context setting of from an FPI's perspective, how does this become more lucrative? But before that, I want to quickly go to Piyush. Piyush has been tracking the entire policy. He is at our studio at the RBI headquarters. And Piyush, there's so much to unpack, but I would request you to focus on the additional measures and just enumerate them for us that the RBI governor spoke about, which supports foreign investor interest in Indian debt.
Vijay.
Okay, I think that line got disconnected. I'll come back to him. Mr. Sabu, can you give us some context setting? In the sense you talked about this 10-year, up to 50-year window now getting opened, the whole passage being eased. What is the kind of volume of investment that you expect to increase?
Yeah, I think we will have to see, because earlier also we were expecting good volumes from FIs when our GSECs were included in various index like JP Morgan index and Bloomberg index, but we have not yet seen major volume into that. But by these announcements, I think, and then further the government has also announced the tax rate cut. So clubbing both together, we are inviting long-term capital from the foreign investors. And I think this should make this proposition very, very lucrative for them. And we will expect that good amount of investment will come from them. We can't quantify as of yet. We will have to see as to how they see the Indian markets, and along with the improving forex rates, USD INR rate also, that will also be beneficial for them. So I think this is a win-win situation for all, and we can expect good amount of investment going forward.
Okay. Manishi Ray Chaudhary, CEO of Ember Capital Partners, with us as well. And we'll get back to our other guests as well. Ashma Goel has been waiting. We'll just ask you, ma'am, a question. But Manishi, how does this impact sentiment? Okay, I don't think I will.
Now?
Yeah, Manishi, please carry on.
Okay, can you, am I audible now?
Loud and clear.
Okay. Right, excellent, thanks. So, I think this has been in the works for a while now. I mean, I think the government and the Reserve Bank has been thinking about, reducing the taxes. I mean, it's a bit of a disappointment that there's no pronouncement on equities as of now. If equity capital gains taxes would, are addressed at some point of time, that would obviously be an additional fillip to this, to this situation that, that India is in. But, one about this whole affair, the rationalization of the taxes and several other schemes that are being thought about. What is a bit disappointing to me is that Indian policymaking has become reactive. We have a crisis about foreign portfolios moving out, and that is when India decides to react. If India is able to convey a sense of policy stability that, okay, this is, normalization of policies and uniformizing with the rest of the world is going to be the taxation policy going forward. That would give a certain degree of confidence to the FIIs. Because otherwise, what might tend to happen is that, okay, along with the tax rationalizations, the foreign investors may think that, okay, this is just a small window, maybe over 1 year, 2 years.
I have one, Manishi, I want to interrupt over here. I take your point. Now, my question over here is, you've removed the capital gains tax when it comes to sovereign debt, right? However, it's absolutely intact on the corporate bond side and on the equity side right now. For an FPI to allocate funds right now across Indian asset classes, how do you expect them to manage that risk from here on?
Well, there is honestly no way to manage. I mean, as I was saying, that an FPI may actually think that, okay, this is just a temporary measure. So if I invest now, who knows? I mean, this may actually go 1 year or 2 years later. I think the bigger question here is that, the problem with India at this point of time is actually corporate earnings growth. And it is not so much to do with the taxation policies. Indian corporate earnings growth this year would be in single digits, like we had last year. So, if you combine all this with about 19 to 20 times price earnings multiple, single-digit earnings growth, a weakening currency, then this does not really inspire confidence from foreign investors.
So it depends on how you want to look at it, frankly, Manishi. I mean, many would argue that the last 2 quarters, especially Q4 for India, has been better than it has been for a while. The corporate earnings have come to the table, but the fact that there is no AI trade is what's keeping foreign investors away. And maybe from the government's perspective, a lot of people asking me, even on my socials right now, why nothing for equity? And I want to ask Ashima Goel this question. Doesn't it make sense from a policy perspective to encourage more stable foreign investment coming in debt versus maybe what is largely termed as hot money into equity right now, when people are wondering, and you're seeing what's happening with the Nifty right now, people are wondering, oh, why not even cut long-term capital gains tax in equities while you're at it? There seems to be a certain thought process in this, isn't it, Ms. Goel?
Yes, absolutely. I disagree with the previous speaker in the sense that this is not ad hoc. Overall, our bond markets are underdeveloped. And so these measures aim to develop those in the way that, the rate, the kind of too many similar participants. So you get a broader set of participants, you get more long-term pension funds, you decrease transaction costs because it's zero tax now. And if the results from this are good, then this can become a permanent kind of simplification of taxes. While in equity, there is too much volatility at present. There are many kinds of considerations in play. So this is not the time to sort of announce anything for equity. It would come with the next budget, maybe. But I agree with the point that, all these measures should be part of well thought out and continuous reform towards tax simplification, towards developing markets, towards being, aligned to your peers in the taxation, towards no retrospective movements. And they have committed to that. So I don't think investors coming in need to worry that they will be taxed for the period when it's been announced that taxes have been cut.
Okay. What else? I mean, the equity markets have come off a little bit. I mean, but I guess the point that Ms. Goel is trying to make is also well taken in some sense. And I think a lot of people have kind of pointed to that this is one of the many measures that would come in. Now, Devang, you were talking about this, right? That this is the first move done. Maybe some other stuff happens, but the RBI has actually done a lot more than what was anticipated, the government and the RBI. What more do you anticipate in terms of a policy action which could help reverse outflows or at least get in some stable flows on the debt side, if not equities?
Yeah, so if you'll ask me, Neeraj, this is, I think, a precursor to our bonds getting listed on Bloomberg indices. There was a lot of noise across on that Indian bonds can be included in the Bloomberg indices, and that will actually fetch around 20-25 billion of flows in India. So my understanding is we are getting away with the taxation piece, we are getting away with the withholding tax. I think Bloomberg will be more than happy to add us, and their review is up. The review is up by September. So that would be a positive. Secondly, I think if you talk about additional measures, I think there is a possibility because there is a lot of increase in fuel and fertilizer subsidies which the government might have to bear, and there can be some bit of fiscal slippage. There is a possibility that even government can look across at a sovereign bond issuance to attract some dollar flows. So our view is, in fact, the measures are completely correct because as Radhika highlighted, I think just a rate hike would have not helped the currency to stop depreciating. In fact, it is a vicious cycle where growth weakens and then somewhere down the line you see more currency depreciation. I think RBI has done a great job of announcing all of these measures to attract the real problem, which is currency at this point of time, control the BOP, and the measures which can be announced in future would be probably getting our bonds listed on the Bloomberg indices and probably taking a route of sovereign bond issuance that is more on the government side to bridge the fiscal gap.
Devang, point taken over here. In fact, Radhika, let me come to you. I was just looking at the other numbers that they've announced as well. Now, you're talking about the FY27 CPI, which has been lifted to 5.1. You're talking about upside risk there. You have downside revision on the GDP coming in as well from external shocks. If you have to take these two perspectives and then look at the easing that has been done for the FIs, will it still remain attractive according to you?
Certainly, I think, if at the very start of the governor's comments, he started off saying that bond yields have generally gone up across the board. He also mentioned about bias towards tightening for many of the major central banks as well. In fact, in Asia also, we have seen a few already tightened policy. And I think when he went on to discuss about the economic assessment for India as well, I do think there was a lot of emphasis on inflation and inflationary risks. And I think that came from the point of view of the central bank actually emphasizing that price stability will be very important. And I think that they followed up with raising the inflation forecast by about 50 basis points. So that's quite a significant increase. So I do think that they I do think I would see this as a hawkish pause. I think there are some market participants who are looking at it as a balanced guidance, but I do think it's quite hawkish because they have spent quite a bit of time talking about inflation, and then there could be second round effects, and they are mindful of that, which again tells you that they could keep the door open to tightening policy perhaps in the second half of the calendar year. Because honestly, what's happening on the global side, what's happening to oil prices is beyond most of the policy makers. Everybody at this point is in a reactive phase to mean that, how do I safeguard the asset markets? How do I safeguard the economy from what the effects are? So from the central bank point of view, I think they're taking action on the current account. By fuel prices increases, which disrupts demand, and also by gold imports, which they've done earlier. And on the current capital account side, we have seen a lot more announcements at this point. So I think they have taken a broader view, use rate policy where required, which is to contain inflation expectations and to do non-rate measures for the asset markets. And I think that two-track policy is certainly going to continue. And I think the fact that it's unknown is how long this crisis, external oil price crisis will remain. And if it remains even towards the tail end of 2026, I think then we really do have to start talking about rate hikes, because with inflation at 5.1% in fiscal 27 and 5.25% on the policy rate, certainly there is not enough real rate buffer. And I think that's where they would try to build it up. So overall, I think the takeaway for us at least is that the guidance was quite cautious and hawkish.
As one would expect. Radhika, thank you so much for speaking with us. Ashima ma'am, thank you for speaking with us. Just want to get some clarity on fresh information that has come from our Delhi Bureau Chief, Shimi Chaudhary, and I'm going to come to our guests on this. The government has opened a portfolio investment scheme to all individual persons resident outside India. This has been tagged as PROI. Portfolio Investment Scheme is, of course, PIS is how we're abbreviating it on your screen in case you're wondering what you're seeing. Now, why this is important? Remember this conversation that there will be some form of NRI bonds, which India had issued in 2013. Are we seeing some iteration of that? Is what I would like to understand. I'm going to go to Rajesh Gandhi to understand this and Manish Sonthalia as well. The other thing that has said, individual PROI, which is persons resident outside India, investment limit in listed companies has been raised to 10% from 5%. Markets are wondering, humko kya mila? This is at least an opening. People who live outside India, the limit to which they can invest in listed entities has been doubled. Overall investment limited for all individual PROIs increased to 24% from 10%. Huge jump up here. You know, the diaspora, this is an invitation to the Indian diaspora to come and invest in the country right now when we need it. Government expands fully accessible route, that's FAR, to include 15-year, 30-year and 40-year GSECs. We talked about that. Sovereign green bonds included under the fully accessible route. Government has removed short-term investment limits for FPIs in government securities. That we know has removed concentration limit for FPIs in government securities. I found this part very interesting. Mr. Rajesh Gandhi, if you can hear me, can you come to me, can you explain your perspective on this scheme for persons resident outside India, PROIs? That's the term instead of NRIs, how we understand it. Can you hear me, Mr. Gandhi? Mr. Rajesh Gandhi, can you hear me, sir? No, I don't think he can hear me. All right. I've got Mr. Tiwari with me from State Bank of India joining in on the conversation right now. I want to quickly get his first take because, you know, we have limited time with him. Mr. Tiwari, big moves from the Reserve Bank of India, of course, as expected on the rate front. But what has been done today to attract investments from outside the country? How do you look at those announcements?
Oh, thank you for having me. So some of these announcements were being expected, and as the largest bank, we were in discussion with the government and the RBI on some of these views were taken. So I think it's very good that all these measures the RBI has announced today alongside the government announcements, which have been also timed today. So overall, this creates a very good atmosphere for people to invest, both individual levels, the FIIs and other companies. And the ECB announcements and the FCNRB announcements, all of them together are actually going to create a good atmosphere. And we should see a lot of inflows into the country, which will help to maybe settle down the rupee level, which is extremely important at this point of time, that we have some band in which the stability of rupee level stays, so that the FIIs can then time and then come in knowing that they would not have a huge depreciation going forward.
Now, as part of those consultations that you spoke about, Mr. Tiwari, where, you know, as the largest bank, of course, State Bank of India also participated, what do you see as the expected amount or quantum of flows coming in? Because now the next step is for the entire banking system to prepare for it as well.
So it's hard to put a number on any total flows which might come in. But if you look at the ECBs, normally every year about $10 to $12 billion ECBs are raised. We may have some increase here because some of the public sector units may prepone the raising if that was planned maybe next year, etc. for the projects, and therefore to some extent they should see some increase. FCNRB again we have to see the exact instructions. It is being given to the authorized dealers, and we are supposed to pass on the benefits. But we'll have to work out as to what rates we should give and how much can we expect. And all the other measures on government securities and all, they've removed a lot of irritants, a lot of tax differentials. How much is this going to result in the actual inflows? We have to assess that. So overall, I think it should be a substantial number, but what that total number will be, it's hard to forecast at this point of time.
I believe, sir, that the estimated 20-25 billion number which was being thrown about, you could actually see a reversal of most of it, if not all, considering that this is even better than what was anticipated from the Reserve Bank of the government.
Yes, it could be more as well. I mean, it
could be more as well. Okay.
Totally, yeah, it could be more, but it's hard to estimate at this point of time. You remember the governor also did not give any number. So it's tough to give any numbers without seeing the reaction of those who are supposed to invest.
But it was good to get this color from you. One more question really here, which is that almost everybody that we've spoken in the last 3-4 days has spoken about how undervalued the rupee was. This move shows that the rupee today, do you reckon this has the ability to keep the rupee shored higher for a period of time, or do more measures need to be taken now?
So I think this would definitely support the level of the rupee, and how much there's always already been a marginal appreciation as we speak. So therefore, it should result in the rupee staying at some level, and more importantly, as flows start to come in. See, these are announcements, and these have a good feel-good factor, but ultimately it has to convert into the flows coming in. So as in the next 2-3 months, which is this window, as flows start to come in, I think the rupee will find its level, and ultimately that would encourage more people to bring in money, and therefore overall the flows could be higher.
Okay, thank you so much, Mr. Tiwari, for speaking with us today and your perspective there. I'm going to ask a quick question to Mr. Sabu. He's the Executive Director of UCO Bank. Mr. Sabu, what is the kind of interest you expect from NRIs, or as we're calling them, PROIs, residents outside India, with all of these opportunities coming in?
Yeah, so various opportunities, I think, open up due to this ease of process also, and announcement done by the government about removing the limit and making the process easy. I think already means a lot of interest is there in the Indian market by PROIs and other NRIs also. That will further enhance due to these measures, and we expect means reasonable amount of inflows out of them also. Yes, but this is not only the sufficient thing. Maybe many more things will be coming forward in due course of time, depending upon the situation. But I think overall, this has been in a positive direction, and will help attract more foreign capital towards our country.
Thank you so much, Mr. Sabu, for speaking with us. Manishi Rai Chaudhary, thank you so much. Just want to take a quick, I would say, status check. Rupee, bonds, Nifty, Bank Nifty, what's happening to all of these asset classes? The Nifty has taken a bit of a nosedive. There is a stock called PNB Gilts. I want to look at PNB Gilts just before we wrap up the show. The Bank Nifty up about 0.3% right now. PNB Gilts 5%. Actually has come off its highs. Why? It's in the business of facilitating investments into G-Secs. That's why you're seeing PNB Gilts up about 5% right now. The rupee would be stronger than it has been in the last several days as we go in. Yeah, about 0.5% up, 95.37. So guys, all in all, it's been a cracker of a policy announcement. We came for the show and we got an extra bonus
and I think everyone's
well.
not really thinking of what happens to rates, what happens to inflation, what happens to growth. The idea is still how are we fixing the short-term problem right now that we have, where we need the money to come in.
Because the fact is no one knows the answers to those questions, including the governor himself, where he has said that's uncertainty abounding.
Yeah, maybe more measures anticipated. We got a Durandar. We didn't expect it. We got a Durandar.
Yeah.
Let's see how the movie continues.
Is it a full form Durandar?
Under the circumstances on the debt side, this is a Durandar.
Yeah.
You can't do more.
Yeah. We're being greedy.
Part 2 will be on equities.
We're greedy, saying what happens with equities. And my point is that this is good for retail investors in the long term, right? You want stable money coming in, which is going to be with you for a known period of time instead of hot money coming in. All right, that's all the time we have on this very extended India Market Open. Thank you for staying tuned. All of the action continues on the other side on NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT,
India's unshakable news habit. NDTV.com is India's #1 English news website.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. Okay. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing with you of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth. we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook,
welcome. You're watching Ask Profit here at NDTV Profit. Of course, the monetary policy took a lot of our time, but it is a good news coming in with regards to where there is 0% capital gain on profits that will be made on government securities. But I think market was expecting more, and that's why we're seeing markets at the day's low point. Let's try to pull the Nifty 50 up and see as to where it's trading at right now. And there you go. It's recovered though from its day's low point, but still trading just about 0.2% higher. We're hovering around the 23,400 levels. The 49 points of an uptick is what we're seeing. But let's try to pull up the Bank Nifty and see as to where it is trading at, because we've been talking about how the setup of Bank Nifty is looking much better than the benchmark. There you go. Of course, this also has significantly recovered from its day's low point, now trading about that 0.8% mark, and 54,700 levels is what we've crossed in terms of where the Bank Nifty goes. Let's try to pull up the Nifty 50 heat map as well and see as to what that heat map is looking like right now. In terms of where specific names go, of course, a lot of your banking and financial names doing fairly well. Bajaj Finance, HDFC Life, Shriram Finance, Adani Enterprise, of course, also doing fairly well. But, your IT name like Wipro, on the back of its record buyback today, down 4%. Hindalco continues to be under pressure. Trent, Tata Steel, Coal India, some of the names that are also under pressure. So that's with regards to where the Nifty 50 goes. Let's try to pull up the sectoral heat map and then also the advanced decline ratio, because Nifty Media is topping that chart and metals is still under pressure. Realty also doing its fair bit of share today, up 1.6% as well. But the advanced decline ratio, let's try to pull that up because that's suggesting as to where the broader end of spectrum is looking like. You have mid cap 150, which is up 0.5%, and small cap 250 also up 0.5%, and it's diverged. So now you have at least more buyers in the market than the sellers. So this is, of course, with regards to where the markets go. But I think yesterday also Puneet was talking about this, with Physics Wala as to what has happened, and to talk about that and to discuss as to what's changed within the last 2 weeks, we're now joined by Amit Sachdev, CFO at Physics Wala, joining us now. Amit, thank you so much, first of all, for taking out the time and speaking with us. My first question to you is, you'd approved a 120 crore capital infusion in your FinZ Finance on 27th of May. And now there is a reverse course of action on lending, after a few days of that decision itself. So what has changed exactly in the last couple of weeks, and what has led to this change in decision?
Good morning, Mahima. Thank you so much for having us, on your show. Two key, things why we started, creating the NBFC and started actually doing lending on our books, So the thesis is that we've actually have enough student outcome learning, models that we had built in-house to start underwriting based on those, So that was the original thesis that we had built Finzi, our, NBFC. And that was the reason why we also, did 120 crores of funding in our, subsidiary. Over the last, probably 1 week, depending on, the conversations that we had with our multiple partners, the idea was, I think it was best left to the NBFCs to actually do the funding. And we do the, the layer in the middle in terms of how we are going to do the funding for these students, actually. So that was the big change that happened. I think Prateek also came out with a statement yesterday that we are going to focus on our core business of, student learning, and online business remains our main business. So I think that is what the big change happened over the last week. and we letting it to our NBFCs that we are working with right now to do the funding.
And Mr. Sachdeva, very good morning to you, sir. It's Puneet this side as well. So this 120 crores essentially will be plowed back into the business of EdTech. Of course, I think that's the rationale that you're giving us also. Then essentially, what has prompted this move? Is that the conversation currently with investors? Because you also on a full year basis turned neutral in terms of your profit before tax. I think you were negative 259 crores last year. You I think positive 10 crores. But going forward as well in the next 6 to 12 months, 18 months, I'm guessing you have plans to turn profitable on the PAT basis as well. So what has actually prompted this move, and what's the future of your NBFC license as well? Is there any clarity on that right now?
So, Puneet, absolutely. I think we are evaluating multiple, ways right now in terms of what we are going to do with the NBFC, entity. Please do appreciate that it is a regulated entity, and over the, due course of very early in terms of next few months, we will decide in terms of what we want to do with this entity. We will not do any on-book lending from the entity. That's very clear, and that's been clearly articulated in our communications all through. But depending on the way forward that we have for getting this money upstream back to Physics Wala, we will shortly come back in terms of the options available to us. Secondly, I think you did mention we turned almost PAT positive in this year, almost 1 year ahead of the commitment that we had given. The focus right now is to just double down on our online core businesses and keep on building from there. And like you said, our guidance is almost more than 2x of EBITDA profitability for next year and PAT profitability in FY27, Puneet.
Okay. Amit, from what we're trying to understand here is that this move also kind of helps you de-risk your balance sheet, right? So just want to get a sense in terms of how much, capital management bandwidth or balance sheet de-risking are you expecting from this move or decision that you've taken?
So, this entire 120 crores, obviously will get de-risked because it will at some point of time get upstream back into our core business. Secondly, if you look at it, I think the reason why we started this was to enable student affordability. Like I said, our mission vision with what, Alex started this also was largely, how do students who get left out do not feel left out because of, constraints in terms of not being able to afford these courses. So this money eventually will get, upstream. What it still does is, like I said, that, the models that we have worked based on learning outcomes, they will still help us keep the cost down because we've over the last couple of years, we now learned how to actually underwrite some of these student loans, So in two ways, this will de-risk. First, our own capital will not be deployed, for this. And secondly, it will also help, the NBFCs that we partner with, give them, work with them in terms of how do we make sure, how do we ensure that the affordability for students continues to be there.
And Mr. Sachdeva, just, because of paucity of time, a 20-second answer if you can. Your online business last year, almost half of your revenue, that's grown at 39%. The offline business, also a similar number, has grown by 31%. Will that growth and share of that business continue at least for the next 12 months? Is that a fair estimate to make at this point of time?
Absolutely, Puneet. So our online business will continue to grow much faster than our offline business. Our ambition for online business is that we want to be 55% of online business over the next 2 to 3 years. That is how we started, and that is what our focus is going to be next 2-3 years, including next 12 months.
Perfect. Well, Mr. Sachdeva, we'll let you go on that note. Thanks so much for joining in, giving us that clarification on NBFCs as well as what's forward for you as well. We wish you the best. Thanks so much for joining in. But just a few minutes to go, so we'll start with the rapid fire round very quickly as well. Let me welcome in our guest now, Tapan Doshi, research analyst at CATapan.in. Devin Mehta, technical research analyst at IDBI Capital. Both of you gentlemen, thanks so much for joining in. The first question, which we have from Zeenat from Ranchi is on sale. She's holding 250 shares at 185, and Devin asking if she should continue to do so. What's your view?
I think overall we have seen profit booking from higher levels. One should try to book profits if it's in profit.
Okay, V2 Retail is the next one. Kishore from Bengaluru has bought at the levels of 200, 510 is the quantity. Should he continue to hold this, Tapan, your view?
No, sell on rise.
Got it. The next question, that's coming in now, and this one's on Vari Energies. A viewer wants to buy into this counter right now. Tapan, would you recommend that it's a good time to do so?
No, wait for 1 or 2 quarters. Challenges are there.
Okay, Deven, is this a good time to book profits in Paras? Namit is asking this question. He's got 48 shares at the levels of 671. What's the view like on the charts?
I think yes, definitely one should try to book profits. It is entering an overbought zone.
The next question is on PNB. Our viewer Murli from Hyderabad, the regular viewer, has bought shares at 79. Tapan, he's been holding for the last 3 years, holding 300 shares. Is it a good time to book out or continue to hold?
No, continue to hold.
Okay, the next one is from Aparna. She's holding 200 shares of Moltec Packaging at an average price of 700. Price target for the next 6 months. Devin, on the charts?
Sorry, I do not cover this particular counter.
Tapan, any view?
Yeah, hold for now.
Tapan, on Timex as well, Jayesh from Mumbai wants to know if it's a good time to buy this because, stocks up 40% in this year itself. We had some promoters selling also at the start of the year. Any view?
No, buy on dips, not now.
Okay, Samman Capital, 550 shares bought at an average price of 165. Is it a good idea to sell at the current levels or possible higher targets in the near term, Devin?
No, I think one should try to book profits.
Next one's on Indian Hotels, bought at 710 and roughly 300 shares by a viewer Ashok Pai. I think it's been in the same range for the last year or so, Tapan. Is it a good one to continue holding for the long term?
Yeah, hold it and you can buy at dips also.
Okay, the next one is on Anantraj, 100 shares bought at the levels of 650. Hold or exit? Sunil wants to know this. Devin?
I think one should try to book profits.
Ravi's purchased 100 shares of Marico at 853. Tapan, would you suggest him to continue holding on to or sell out?
No, hold it for now.
Yes Bank bought at the levels of 12 rupees. 1000 quantity is what our viewer Basavaraj has bought. Continue to hold this from a long-term perspective, Tapan?
Yeah, hold it.
The next one's from Nidika from Pune on Tata Capital, holding shares at 326, asking, the performance is good, but stock's not moving. Tapan, do you think it's all priced in right now?
Yeah, pricing so she can sell at a rise.
Okay, Nalco, 130 shares bought at the levels of 422. Hold or sell, Devin?
I think one should try to exit this one.
The next one coming in now is from Siva from Toronto. He wants to enter a few stocks from the long term. Samvadara Motherson, Uno Minda, either of those that you like, Tapan?
Yeah, both are good. No, you can share equally.
HBL Engineering, 200 shares bought at the levels of 999 6 months back. Continue to hold, accumulate more. Devin, on the charts?
I think one can hold and buy on dips near 780.
Got it. HDFC Bank, we get a query on this every day. Tapan, is it a good one to continue holding right now?
No, ICICI Bank is a better option.
Okay, Bharat Dynamics, 20 shares bought at the levels of 1195. Continue to hold this from a long-term perspective, Tapan?
Yeah, currently hold.
Next one's on IRB Infra, bought at 29 rupees per share. Tapan has been a rank underperformer, but should our viewer continue to hold this one?
No, sell on rise.
Is it a good time to enter Ashok Leyland? Shankar is planning to buy 1,000 shares from a 3 months perspective. Devin?
I think no, one should wait for breakouts. The stock is trading lower.
Okay. Kane Stack also, Devin, our viewer Ravi is holding, but at 4250. Should he buy more right now or continue to hold this position or sell out?
I think sell on rise.
Okay, Cochin Shipyard bought at the levels of 1768. Buy, sell or hold from a long-term perspective. Archer from Bengaluru wants to know. Tapan?
Hold.
The next one, that's coming in on Shriram Finance at 1193, Devin. So I bought at elevated levels. Should she average down right now? This is Lalita.
I think yes, one can average.
BSE, is it a good buy at the current level? Kanan from Chennai wants to know from a short-term perspective. Devin?
Yeah, I think one can buy with a stop loss of 3840.
Hamsini wants to know about Jyoti CNC Automation. Is it a good time to enter? Tapan, would you recommend that?
Yeah, she can.
Tata Power or KPI Green? Which one is a better bet from a long-term perspective, Tapan?
KPI.
KPI Green, sorry. It's not K yet.
KPI. Sorry, my mistake. KPI.
Yeah, okay.
Okay, the next one's and the last one from Kaushik from Baroda. He's holding Nalco at 222. Tapan, should he exit and enter into Hindalco is his question. So what would you recommend on either?
Yeah, he can shift to Hindalco.
Got it. Well, that was the end of the rapid fire round. Of course, a longer one because of the MPC meet. But Deven as well as Tapan, thanks so much for firstly patiently waiting by and giving us your views across the last few minutes of the rapid fire round. But viewers all the time in this edition of Ask Profit, thanks so much for watching. Stay tuned. A lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal. And we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing with you of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jewelry. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. I get you this KYC show where interesting companies come in. Of course, at times these are recently listed companies and at times they come with new stories. And for today also I've got you a very new and an interesting story, and I'm sure you must have seen it all across your housing societies as well. It's a Mumbai-based decor company. First hint for you. Second hint, it's engaged in the decorative wall panels and the laminate segment. There's a lot of competition in it, but I'll try to refine it. It is a recently listed company. I'm sure you must be guessing it by now. It was listed in September 23 and the brand is endorsed by Hrithik Roshan. Interesting. Try to guess the company's name, and of course the company's name also interestingly has the promoter's name also in it. The company's name in focus is Euro Pratik Sales. This is the company which you're talking about. We had heard about it, but after its listing, it seems like there wasn't much buzz in the street, and I was trying to understand why there is no buzz happening, and there was a little bit of promoter buying also happening in this counter, and that is where a little bit of interest came in for me. But let's see what are the key questions to be asked for Euro Pratik Sales. The first one is the raw material margin picture. Because the majority of their products are crude-based projects, and of course remember in the month of March there wasn't much impact because all the pressure started coming in the first quarter itself. Risk mitigation factors, of course what the company is trying to do, that will be very much important to understand, and also thirdly the volume growth outlook. And we'll try to get those new product launches also because they keep on changing their product catalog. The progress of the international operations right now, it is quite less, but are they expanding to new regions? Of course, and speaking of that, 2 to 3 years of expansion, which area are they doing? Will it be via acquisitions or will there be market share gains? That's the key concerns. Also, the integration of two recent acquisitions, Uro Veneer Worldwide, this is the southern industry, and Chawla Brothers, that's the northern market. So how they do their integration is something to be asked about, and a very interesting second gen management, Pratik Singhvi, the CMD at Euro Pratik, is going to answer all our questions. Let's understand the key details about the company. What's this company all about? Ye company karti kya hai? I had mentioned you earlier that it was incorporated in the year 2010. It's engaged in decorative wall panels and laminates. In such a short period, I would say they are able to get a good market share. Recently listed company, but of course after listing there hasn't been much buzz in the company. Brand has been endorsed by Hrithik Roshan. That's pretty much interesting. Market share, impressive for a short period like this company's existence. 16% of it is pretty strong. 36 contract manufacturers. That's what the company claims, that it is asset light in nature. The distribution network is around roughly 138 cities with 198 distributors. Also, we look at it, 2.25 lakh square feet of warehouse spaces across India. This is the key details about the company, and also the global subsidiaries is starting to come up, US, UAE, Europe. But remember, the overall revenue contribution is very minuscule right now globally. First, let's see what they expand in India, and that's what I was coming to. 98% of the revenue just comes from India. Also, apart from about the company, remember the revenue mix kya hai? 57% of the revenue mix still comes from the wall panels, and the decorative sides come in, and if you have that number, this is the laminates, that's around 31%. So it is both of these categories are value accretive or high margin how the domestic revenue pans out, southern India still commands almost 47% of revenue coming in, but the other places also, especially the western India, that has 26% of coverage. So yes, it is a pan-India player, but a good support coming in south and western markets. But ये market कितना बड़ा है? Market share की आंकड़े पे बात कर लेते हैं. And look at that CAGR growth. It's coming everywhere. Wall decorative, panels, laminates. As the disposable income rises in India, this is how this industry is also going. So definitely it's doing well. What can work for the company? This is important. It's a debt-free balance sheet, and this is what I liked. Also, good integration is happening, and that pan-India expansion is playing out. This is what I like for the stock. Top line growth has been good. I was just checking the Q4 numbers. That was good enough. Asset-light business model is something which is really good. But apart from this, what may not work? There is a lack of analyst coverage here. That's the first and most important. Secondly, majority of the products are being crude based, so there is going to be an impact. Now you cannot have a 100% pass through. There will be some lags. The margin, ROC, ROE pressure is being seen, and I'm going to show you some numbers. That is where a little bit of concern lies for me. And also the rise in working capital days, it has been constantly going up. That is where I feel there is some concern in this stock, and of course in the stock price also there are some issues. But let's try to understand more about it. A company mein kya hai? KYC ratings, let's get them all in. Income statement, balance sheet, cash flow, the usual numbers are there. ROC is something which I'd like to point out. Some interesting snippets are coming in. Remember, it's just been almost 1.5 years. It's not even been one full year since the company has been listed, so take things with a pinch of salt when it comes to shareholding street cred valuations. I'll try to show you how much of that has corrected from the IPO. हमेशा देख रहे हैं कि आजकल के जो IPO आ रहे हैं वो महंगे दाम पे आ रहे हैं. Because of that, a lot of newly listed companies are trading at a discount to their peak valuations. Also the outlook, we'll try to understand how the industry is moving, how the company is moving, and what can be a short-term hiccup. First one, let's try is income statement. And income statement, largely the numbers have been strong. Last 3 years CAGR numbers. Top line देखिएगा 23% CAGR growth coming in. Decent growth coming in the EBITDA and the PAT numbers. But Q4 is something you should be watching out for. And in Q4 the numbers have been good. The YOY growth has been good. PAT has jumped up almost 57%. On the other hand, 27 to 37% growth coming in overall revenue and operational profit. But a little bit of concern comes in because this business was generally a 33 to 35% margin business, but this time the margins has come down. That's around 28%. Now we need to understand, is this pressure going to come more because the crude based product is something which majority of them are in the portfolio. But as of now, historically speaking, I have given this a strong thumbs up. Let's talk about the balance sheet. Largely, the best part is it's debt-free company. There's like a minuscule amount here borrowing that's literally not there. Cash balances, if we have a look, that's around 18 odd crore rupees. Overall, the balance sheet looks good, but the working capital, that is where a little bit of stress comes for me in my analysis. But we'll come to that later. As of now, balance sheet is a strong thumbs up. So we spoke about income statement, we spoke about balance sheet, but let's try to understand the cash flow. Is there any lumpiness in this business? Is there any seasonality? And I feel there isn't much as such. Reversal has happened, but look at FY24. This is where a good cash flow of operations had come in. FY25, some kind of reversals. And remember, the company is spending a lot in integrations also. So your cash flows are going to be disbalanced, at least in the growth phase. And when that happens, even your return ratios get impacted. So right now, let's keep it a neutral rating because of so many things happening in the company. And my concern, which I had explained to the return ratios, what's happening. So when a company claims that they are asset light, their return ratio should be on the higher side. So why there is a mismatch, we'll try to understand from the management. But look at that ROC from FY23 to 61%, and the dip started coming in. It's around 44%. Same thing happens for ROE also. That's where the dip is coming in. So return ratios, I have given this a strong thumbs down. Also, let's talk about the shareholding, how things are panning out. Promoter stake has been largely untouched. FIs have slightly sold off. They had just had a minimum stake of only 1.6%. That has come down to almost 0.5%. For DIs also the same story is repeating from 5%, a minor sell-off. it's around 4.6%. So let's not be harsh in our analysis. Let's give it more time. It's hardly been not even a 1 year. So I'm going to give this a neutral rating for shareholding segment. Also, let's talk about this trade cred. How much things have moved and ज़्यादा move नहीं हो सकता. September 23 में ही इनका listing हुआ था. So if you look at it, a 6-month stock is down 27%, and this is where the concern lies for me. That post is IPO. If you have entered, you haven't made money on this. Year-to-date basis, stock is down 18%. Listing gain definitely was there, but it seems like that has evaporated. And since listing, the stock is still down. It's in the red territory. So let's give it more time. Should have been negative, but I've given it a neutral rating right now because let's need to give it a little bit more time to judge a company. It's been recently listed. Let's talk about valuations, what has happened. In this valuations, the peak valuations, the IPO time के euphoria में इसका 54 times trailing पे ही चल रहा था. अब देखिए घट के 34 times आ गया. So there is a good discount happening in the valuations. So valuations fronts, it is looking attractive. So I'm going to give this a thumbs up here. But let's talk about the outlook. The company has a good outlook here. Euroveneer, that buyout which is happening over here, the revenue potential is 115 crore and PAT of 20 crore in FY27. Also, the second acquisition, Chawla Brothers for Northern India, the revenue expectations is 80 crores in FY27. But if you look at the other key triggers, they want to focus on the deeper penetration in the Indian rural market. That means अपने distributors को इन्हें बढ़ाना पड़ेगा. उसके अलावा forward integration via inorganic growth and acquisition. So new industries they want to go in, or the new geographies they want to go in, they'll start acquiring them. And also the global front expansion. एक बार इंडिया का मॉडल ये सेट कर लेते तो ये बाहर में जाके ग्लोबली भी इस मॉडल को ला सकते हैं. But I have concerns. There is a lot of raw material cost. There is a lot of Middle East issues. इसका भी तो impact आएगा, at least in the medium term, 1 quarter, 2 quarter. For that, I'm going to give this a neutral rating as well. But let's try to understand and give you the entire picture of what's the total ratings looking like for Euro Pratik sales. And largely, income statement and balance sheet has been good. Return ratios has been a big question. So I'll try to understand that from the management point of view. But if you look at the other key segments, especially you could talk about the street cred. The stock hasn't made money post its listing, and the valuations, however, have corrected from their peak levels. Outlook, I would keep it neutral. Company has kept it positive, but there are global sentiment also. But net, largely in line with what the numbers I generally give. That's around 4.5 out of 8 for Euro Pratik. But for the conversation, we'll be joined in by Pratik Singhvi. He's the chairman and managing director at Euro Pratik. And interesting snippets about him is that he had launched this company in the year 2004. That's almost more than 2 decades of experience in the wall decor industry. But this is a time for a quick break right now. And on the other side, we'll be speaking with Pratik Singhvi.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of our services to build in the inflation that's come from that.
But if you could give us some details about what that 1% is.
That's a great question. You must be with the media. Are you? What outlet?
NDTV Profit.
Great question.
Welcome back to KYC, and now we are joined in by Prateek Singhvi. He's the Chairman and Managing Director at Euro. Prateek, you could say good afternoon, Prateek. It's always a pleasure to have you here at NDTV Profit, and for the first time, your company is coming in my show. I just want to understand the first and foremost, the Q4 numbers were pretty strong, but one thing which, kind of hit my eyes was the margins, You're generally enjoying 30% plus margins. This time it dipped to 28% on the calculated basis. But the quarter which is going to come, that's going to be impacted. So I just wanted to understand how the margin outlook looks, at least for the short term. And is there any pass-through mechanism, because a lot of majority of your products are crude based?
Firstly, thank you very much for having me on the show. The margins which you are seeing is on a consolidated basis because we have acquired two companies where we hold 51% of the stake in the company. So the revenue comes in 100%, but the profit comes in 51%. So that is the reason of margin percentage which you can see is on a lower side. Talking about the business, we are still in this challenging environment, geopolitical issues, Middle East crisis, but we are still we are proud to say that we are still in a growth trajectory. We do believe in keeping a lot of inventory with us, and that is keeping our business on a growth trajectory even in this challenging environment.
And Prateek, just to understand, is there any risk mitigation procedures which are being undertaken by the company in these situations? At times what happens is you move into a value-added product, or maybe you get in your new distribution channel partners. What are you doing to mitigate the uncertainty which is happening across the world?
Yeah, so a few things which company has taken steps to mitigate these geopolitical issues. One is we are not buying in US dollars, we are buying in a local currency. Our biggest supplier is based out of South Korea. So we are buying in Korean won, which has not appreciated against the rupee, not significant, just a couple of percentages over the last 1 year. In terms of the domestic market, we are trying to get into smaller pockets. More than 80 dealers have been added in last 4 months in the Indian market. So we are trying to penetrate deeper into B and the C categories of cities across India.
All right. Prateek, apart from this, also maybe this is a result of, integration of two new, acquisitions, but the working capital days have risen, and the return ratios, which we used to earlier get a very handsome return ratios your company used to enjoy, that has come down. Is it because of these acquisitions only, or is there something else?
So the first acquisition was in the company from the 1st of December. So, but the full year numbers go in the working capital. So that is the reason the working capital is showing more. For this year, both the acquisitions will be for the entire year. So it will be on a reasonable basis as per before. Similarly, for the return on capital employed, as the acquisition was done in the middle of the year, the numbers have been impacted due to that.
Basically, they are bottoming out. Now the worst is over. If you're just
Right.
talking out the number, fair enough. But let's try to understand a little bit more about it. In case of, let's say, 1 year, 18 months, what's the volume growth outlook looking like, Prateek? And also the new product segment, because your segment is very, very, dynamic. Dynamic. A lot of product changes happen, new trends keep coming in. You just spoke about your Korean partner. I'm sure you must be doing a lot of R&D and traveling to figure out what's next. So we just want to understand anything, what's next, any kind of good launches or tie-ups we can expect.
So yeah, it's a ongoing process all the time. In the last 4 years, we have launched more than 100 catalogs. So at a speed of more than 1,000 designs every single year. So for next 3 to 4 months, we would be launching around 400 to 500 designs, which are already in the pipeline. Our DNA is launching new stuff, giving new the Indian customer customized Indian taste products. So that process is always on. We have currently onboarded around 42 contract manufacturers in India as well as globally. So we customize the product for the Indian market, and we will be launching those in the coming future as well.
Fair enough. But Prateek, I just want to understand, because the international business has not picked up, it's just 2% of the revenues. But you have been making announcements, your subsidiaries, US, UK, even in Europe. Just want to understand, what are your plannings, and have you earmarked any money for this international expansion, or how will it going to be?
So yeah, we have acquired a stake in a company, in a Dubai-based company. Due to the geopolitical issue, it's been delayed by a quarter. Hopefully by second quarter, we would be starting our Middle East operations. Also, we have a company office in US, but even today, 98% of the business is coming from India. And we want to focus in India first, and along with it, we'll try to go global as well.
Fair enough. So that's somewhat the India business model gets replicated globally. That's what as reading from your presentation. Prateek, the India expansion plans, because of course that the international expansion is still small. The India expansion is still big. We have 2 acquisitions which have been already taken place. We'll talk about that a bit later on. But right now, I just want to understand your India expansion plans and the market share guidance. There are 2 ways to look at it. One is the competition, because it's been just 15, 16 years, you have got a very good 16% market share, because there's a lot of competition here. Just wanted to understand your view on the competition, the market share, and also India's expansion plans. Are you going to look at for any inorganic acquisitions now more?
So yeah, the Indian market is very dynamic. As you said, there is a lot of competition, but there is always value for innovation, R&D, bringing in new stuff all the time. Our distribution channel is well aligned. Currently, we are present in more than 116 cities with over 200 distributors working with us tirelessly over the years. So innovation is the key. Competition will always be there, but I feel if you are able to innovate and bring new stuff to the Indian market, you will always be a few steps ahead. So we continue to focus on that. Growing inorganically is also an option where we are considering to go deeper into the Indian pockets by forward integration, having like-minded people aligned with us, and grow and take this company to the next level.
Fair enough, Prateek. But now let's understand about the 2 most important acquisitions which have taken place. You have given your FY27 contribution also from them. But what's the process timeline looking like, for Euroveneer World and Chawla Brothers? Are they fully integrated into the accounts, or is there something left, plus minus? And all the benefits will start coming in FY27 only?
100%. Everything is integrated. This year we'll have the full numbers of both the acquisitions. I would like to add here is both the companies are, one company is 28-year-old, the other one is 47-year-old. So they have a proven business. It's nothing new what they are doing. It's just that it is getting integrated into our company now. So all the numbers will be seen from Q1 this year as well.
Prateek, just a short question, because the way you are going about acquisitions and expanding, is there a chance to look at a fundraise in the next 6 to 12 months, because you are expanding also. So I thought mathematically there might be a fundraise.
So both the acquisitions would be around more than 105 crores total value, which we are doing from internal accruals. As on today, also the company stands at net debt free. We believe to be debt free, but if required, if the business and if the business looking very lucrative, we might go in for some fundraise. But the DNA of the company is to be debt free as much as possible.
That's pretty much interesting, the way you look about the DNA is coming in for the expansion. But just one final query I have is on your peers. How's the competition looking like? Because your industry over last 1.5, 2 years, there was a little bit of pricing pressure. Is that coming off now? The weaker ones are leaving the industry. What's happening here?
So yeah, we are one of the leading players with 16% market share of the decorative wall panels. Yeah, the competition is there, but I feel in this challenging environment, it will the consolidation will happen, and the players who are there for the long run will sustain. So I am a firm believer that in challenging situations, the company which goes through it in a better way has a long-term good vision, and the company will do well in future as well.
Right. Thanks a lot, Prateek, for your views on the company, the industry, and the outlook ahead. We also got a lot of clarity. A lot of numbers are getting jumbled up, but then you explained us nicely why this has happened because of the acquisitions, and that is why in KYC we get all this important work done. Thank you very much, Prateek, joining us. So that's the management clarifying a lot of numbers because of the key acquisitions, but nevertheless, despite the uncertainty in the markets, still bullish on the margin outlook and the growth for first quarter. That's pretty interesting. So for interesting stories like this, stay tuned to NDTV Profit, and yes, keep watching KYC.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT,
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
We'll be traveling back to Delhi first thing tomorrow morning, where we'll be meeting with Minister Goyal, and we're very optimistic. Look, we're 99% there. The last 1% we're working on.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year. Okay. We are just waiting for the regulatory approvals.
In the near future, it looks sustainable, but it all depends on the environment and the war. So if it really deteriorates and one doesn't have any idea of when will it end, every day you get hopes and the next day the hopes are dashed.
There is a cost impact, and I would say there's a 100 crore cost impact, but I think that we've repriced some of us.
Good afternoon, you are watching Markets at 12 with me, Sharad Dubey, and this is the show where we get the updates on the top buzzers and the news updates. Let's do a quick market check before we take you to the RBI's press conference. It's about to start in some time. Interesting update coming in. Let's pull out the Nifty and as well as Nifty Bank to see how much changes has happened. The moment the announcement had come in, we had seen a decline coming in overall the numbers, both Nifty and Nifty Bank, but then a little bit of recovery coming in. Just a short check, it's still flat, so we'll try to understand, but Nifty Bank's technical setup still seems slightly better. Let's just pull out the top gainers in the Nifty, what's happening in the stock specific moves, and then we'll take you slowly to the RBI press conference as well. Largely it's even Stevens in both sides. Reliance, HDFC Bank kind of pulling it down, but on the other hand the financials doing really well. Let's pull out the Nifty Bank constituents to show you what's happening there. And largely a good buying was seen earlier, especially in the smaller names. On the other hand, HDFC Bank is a drag, but ICICI Bank is in the green, so there is a tussle there, and that is why we are seeing Nifty Bank in a small range. PNB, AU Small Finance Bank, Canara Bank, all doing well in trade as well. Let's pull out the sectoral heat map also to give you the entire picture of the whole day's trade, what's actually happening. A major announcement coming in is that the FPI easing of the taxes announcing also, and that is why if you just pull out the Indian rupee and the bond, that's